It is time now for your morning RBI, and today let's dive into the stock market and expectations for next year, because it is the time of the year where all the big banks start to put out their price targets for the year ahead. Strategists have to go on the record or face being wrong or right. And by the way, all of them were wrong about this year, every single one. But that is the topic for another day. Right now, let's talk about what investors are saying off the record, because Deutsche Bank put out their big annual survey of how their clients really believe the market will do over the next year. And this one is much more naughty than it is nice. All right, so what are we looking at here? These columns, there you go. They represent what percentage of respondents think will happen with the S&P 500. Now, the lower line goes from a negative return all the way to minus 30%. That's the far left, to a big gain for the S&P on your far right. And you can see that a majority of the answers are kind of clustered right around the middle. That is to be expected. But there are a couple of outliers on both sides. Either way, overall investors are far from being bullish on stocks next year. The single biggest response that Deutsche Bank clients got is for a drop of about 10% for the index next year. 20% of those surveyed saw the drop of 10% as the most likely outcome for the S&P 500 next year. Maybe in better news, the next highest response was for a gain of about 5% next year, followed by 17% of those saying we could rise about 10% over the next 12 months. So you can take this as a glass half full or half empty argument, kind of depending on how you look at the world probably overall. Half empty is that the single biggest response, excuse me, I'm getting over it, is for a drop. Half full would be that the next biggest responses are for a gain in the S&P 500, and the combined responses were more than the biggest one on the negative side. Hey, we're going to call that the Sully side up view, right? But either way, you can see that nearly no one is wildly bullish. And later this week, we're going to bring you more of the official strategist targets. The next year certainly should be random, but interesting, and maybe a little painful if all those Deutsche Bank clients are right.